So, ladies and gentlemen, I welcome you all to the Q3 FY23 post-earnings conference call of Brand Concepts Limited. Today, from the management, we have with us Mr. Abhinav Kumar, full-time Director and CFO. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements. These forward-looking statements may involve risks and uncertainties that may cause actual development and results to differ materially from your expectations. Also, this is a reminder that this call is being recorded. I would now request the management to talk a bit about their business, the performance during the quarter, any key highlights, post which we will open the floor for Q&A. Over to you, Abhinav.
Hi, good afternoon, everyone. And thanks a ton for taking out time and joining this call in so many numbers. Really heartened by that fact. So, as you see, we've given our Q3 results, and I was asked this question after we had done our Q2 quarter, that is it just one of those blips, or do you see that such kind of this thing is sustainable? And I'm happy to share that we've done a good Q3 quarter. Numbers are sustaining. One thing I think I would like to, so we've done almost a 70% year-on-year growth from last year, same quarter. And EBITDA levels have risen by almost 100%. PBT levels have risen by 101%. And obviously PAT levels have again risen by more than 100%. So in terms of growth, I think we've delivered a good result till now. Till 9 months, if I look at, again, 9-month results are again quite nice. And we've grown by, in terms of sales, we've grown again by more than 100%. EBITDA levels have, so more than doubled our sales. And EBITDA levels, I think we've more than tripled ourselves, right, in terms of EBITDA levels in the 9 months. So pretty happy to share these results with everyone. Another good aspect that I would like to highlight from the company's perspective is that it's not one channel or one particular department firing. We have, in fact, grown on all the fronts, all the channels. So offline as well as online, our distribution, large format stores, our EBOs. So all of them have contributed to a good growth. So very, very happy about an all-round sort of a 360-degree approach and development on that front. Another happy news that we shared in the month of December itself was the announcement of, as I had promised, that we would announce at least a new brand signing. And we have already announced our association, our signing of the brand Aeropostale for Indian market. There are, we've signed them for all the categories that we represent, which is travel gear, small leather goods, and women handbags. All the 3 categories we've signed. At the same time, we've also signed an experimental category of socks with them, which is just an experimental category. We want to see, we want to keep experimenting. We want to see where we can go with that. So happy to share that news as well. So overall, yes, I think all good. We are on a good start. We are on a good wicket, and we hope to continue this journey going in the future as well. Now, without much ado, let's start the Q&A, because I'm sure there would be a lot of questions.
Sure. All those who wish to ask a question may use the option of raise hand. We have the first question from Devrat. Devrat, you can unmute and ask your questions.
Hi, Abhinav.
Hi, Devrat.
Congratulations on a great set of numbers. So just wanted to understand. So QOQ, the numbers are kind of flat because should one assume that Q2 was more of seasonal growth, which is why we can see no growth, quarter on quarter?
See, if you see from Q2 to Q3, yes, there is a minimal growth of 3 to 4%. But see, in retail, an ideal comparison will never be a quarter to quarter. The ideal comparison will always be from the last year's preceding quarter, last year, same quarter, because yes, retail has a seasonality of its own, right? And if you look at certain of our peers also, or everybody in the retail industry, they showcase similar sort of a trend. So it's not fair to compare quarter on quarter. But what I would still say is that Q2 for us was a very, very good jump from Q1, and we've sort of been able to sustain that momentum.
Okay. And secondly, just wanted to understand, this new brand that you signed, Aeropostale. Now, in your previous calls, you had mentioned that you'll have one lightweight brand and one heavyweight brand.
Right.
So this Aeropostale would be a lightweight or a heavyweight?
Aeropostale for us is a lightweight brand. This would be a lightweight brand for us.
No, so what kind of revenue? If it's possible to give any kind of projection, like or do you have any targets in mind of what kind of revenues you can do from this in, say, FY24?
See, FY24 would be a little difficult to predict because first, so any new brand that we sign, we will, the entire product development process of design, submitting those designs to the licensor, getting the approvals, then post that, creating your sample set. The sample sets are again sort of approved. And then you get into the final leg of placing the orders to the factory for the first time. So all mold developments, new developments. So it typically takes between 6 to 9 months initially. So FY24, I don't know how much of this thing would be seen from Aeropostale. We would probably get about 6 months of sales window. FY25, I think, would be the real benchmark where we would reach with the brand, right? That'll be the first full year for the brand. Having said that, I had mentioned this in my earlier calls as well, that a lightweight brand for us, our outlook is that in, say, 4 to 5 years, 5 years of horizon, we look at around a 50 to 100 crore retail, right? Where our wholesale is 50% of that retail. So the turnover that we see, this 45 crores, is primarily wholesale. So which would mean that we would have done 90 crores of turnover at retail. So excuse me. So we're looking at any lightweight brand doing about between 50 to 100 crores of turnover in terms of retail. So that would be the outlook even for Aeropostale.
And are we on track to sign on the heavyweight brand, as you had earlier indicated that you wanted to do one lightweight, one heavyweight?
Yes.
So are we on track to sign one more heavyweight by, say, end of this quarter?
Yes, we are.
Okay. That's it from my side. Really good to see your margins improving, and so hope we are able to continue the show. Thanks so much.
Thank you, David.
Thanks, Devra. Anybody who wishes to ask a question, please use the option of raise hand. Rajiv, you can go ahead and ask your question.
Hello. First of all, congratulations for your good sets of numbers.
Thank you, Rajiv.
Yeah, my first question would be, your current rate indicates that you will cross 150 to 160 CR for this year. Is that correct?
Yes, the current rate definitely suggests that.
Okay. So the next would be, where do you see yourself in next year and the year after, what is your vision for FY25?
So as I had said earlier also, Rajiv, and I would still continue on the same, that, for this year itself, if you see from 86 crores of last year, I had given an outlook of around 136, whereas in 9 months itself, we've done 122 almost, right? So for sure, we are at a pace where we would have beaten the estimates that we have given. But continuing on the trend, we look at 30% kind of a CAGR to be maintained for the next 2 to 3 years. And that's the outlook that I would like to still maintain. And I think we should be able to sort of achieve that kind of a CAGR. I hope I've answered your question.
Yes, yes. My next question would be, till how far do you see margin improvement at EBITDA and PAT levels?
So in fact, going forward, the way we have created our budgets, Rajiv, and then being very transparent and honest, is that the moment you sign a couple of new brands, initial phase, there might be certain margin pressures as well. Input costs are also rising everywhere. Now, when you have a brand like Tommy Hilfiger, of course, your premium brands are able to command a certain price positioning in the market, right? Certain brands that you sign, which are more in the mass premium segment, or an Aeropostale, which might be into a value price segment, you might not be able to fetch the same kind of gross margins, right? And hence there might be a margin pressure from a gross margin perspective. Now, till these brands also scale to a certain level, they will entail a certain amount of cost structure to be built in. And hence, I have always maintained that while we are, generally, if you're growing at a 30-35% kind of a CAGR, and in fact, from last year to this year, if I see, we've grown almost double, right? Excuse me. So one tends to see a margin pressure, one tends to see a percentage-wise, gross margins coming down because you're aiming for a high growth. But what we would like to maintain, or what I would like to maintain, is that even with this high growth, we would be in a similar vicinity. So I'm not saying that we'll marginally, all these gross margins or your EBITDA levels are marginally gonna keep going up. There are certain expenses which we've planned towards product development, infrastructure building, all of that. And on top of it, the brands will not have the same kind of gross margins because you'll be playing more in the value segment. But economies of scale will also come into picture. So keeping all of this in mind, I would still give an outlook that we would be in this sort of a vicinity, right, of around a 6% kind of a pattern.
Okay. Thank you, sir. Thank you so much.
Anybody?
Thanks, Rajiv. We'll take the next question from Saptarshi Chatterjee.
Yeah, good afternoon, sir. Thank you for the opportunity. Sir, because I'm new to the company, I'd like to ask a couple of questions on the channel distribution. As I've said that almost half of the distribution is through online channel. And then therefore, part one is what would be the margin differences across channels? And second, within online, how much percentage of revenue is spent every year on the ad and sales promotion on the online channel, and how do you measure on the return on ad spends?
See, online, as you see, is 50% of our business. The gross margins over there are tad better. So different segments have different sort of gross margins. But I would say the variance is about plus to minus 5%. And we calculate it more from the contribution perspective. So from your gross margin, we reduce the direct expenses. and post that we come to a contribution level. So at a contribution level, if you will see, so if I roughly translate that at the EBITDA level, I think the variance would be close to plus minus 1.5 to 2%. That kind of a variance would be there, not more than that. Number one. Number two, see, as a company overall, if you will see, our spend on marketing is not that high. So if you'll calculate the percentages in these 9 months, we would have spent in totality about 2.2% in terms of marketing, right? Which is across all the channels. So whether it is online, whether it is offline, everywhere. And the reason for that is we are in the licensing business. I've always said this, maintained this, that, the reason we are paying a royalty to these brands is because we are not in the business of building the brand. We are in the business of building the category for that existing brand, right? And hence, we don't spend too much on brand building activities. Going forward, yes, the marketing spends might increase, but again, overall level पे 3-4% से ऊपर हमारी marketing spend, I don't see that ever crossing. So I hope I've been able to answer your question in the.
Yes, very well explained. And secondly, we would want to understand that the 25 to 30% kind of a CAGR, 30-35% kind of CAGR that you're talking about, how much you think would be coming from the contribution of new brands versus how much would be coming from the distribution expansion of existing brands?
So I think the existing brand still has the potential, which is if you're talking about Tommy and couple of our own brands which are there. So I feel that Tommy, for example, can easily grow at a 20% plus kind of a CAGR, and the rest of the growth is going to come from the new brands.
Understood. Just in that subject, what would be like? I think you would want to grow your offline channel slightly higher than your online channel, and there I think in earlier calls you have talked about 800 touch points that you have in terms of points of sales. How would that grow over next 2-3 years?
So it's not that we want to grow the offline channel more than the online channel. I have always maintained that our online and offline mix is going to be similar. So online, we're very, very focused on the digital play as well. In fact, talking a little more about digital, during my last calls also, I had mentioned this, that during my last calls also I had mentioned this, that we have two kinds of play in the online, which is one is where we directly supply to all the e-commerce portals, whether it is Myntra, Amazon, Flipkart, or Ajio, Nykaa, all of these guys. And the other is a marketplace model where we control the inventory, we are the seller, and we invested into developing this entire infrastructure in-house. And I'm happy to share that from where 1.5 years back, 1.5 years back, we were, we did not have sort of any marketplace sales. And now of our overall online business, almost 24-25% of the revenue is coming from our own marketplace operations, right? So we are equally aligned for digital as well as offline. It'll always be a healthy mix. In terms of point of sales, if you will see, from 800, I wouldn't say that we'll reach VIP levels or American Tourister levels. There are more than 8,000 point of sales across the country. But yes, we would keep growing. It'll be very, very hard to say exact a number to that, but we keep on growing in terms of EBOs, in terms of large format, in terms of distribution, all the channels.
Great, sir. Thank you. I'll come back in the queue.
Thanks, Saptarishi. We'll take the next call from Mehek Talati. Mehek, you can unmute and ask your questions.
Yeah, am I audible?
Yes, ma'am.
Yeah, thank you for the opportunity. Congrats for a good set of numbers.
Thank
My
you.
my question was regarding our own brands, the Sugar Rush and the Vertical. So how are they performing in terms of the sales and profitability?
Okay, I would say that they're performing decent. I wouldn't say that we haven't bet our shot on these brands. We've never sort of gone out of bounds and put in huge amount of marketing money behind these brands. So they are sort of growing along. And today, if you will see, a decent amount of sales is coming from our own brands. They are mostly price fillers rather than saying brand per se. They are mostly like price fillers, right? And they're doing fairly good.
Understood. And in terms of our sales mix, like we have 3 to 4 major products. One is travel gear, one is small leather SLGs, and one is backpacks. So how has been the sales mix and the growth in last 1 year, and which segment do we think will continue to grow at a good pace going forward as well?
See, I think women handbags ki agar main baat karu to that is currently it is our least contribution. Primarily because we don't have हमारे पास and global देसी हुआ करता था, which we've discontinued. And so in women handbags, if you will see, we just have our own brand, Sugar Rush. And we also do Tommy women's wallets, which we classify under the women's category. So obviously, hence, that is the smallest part of our portfolio. And it contributes to somewhere close to about 8% of our overall sort of turnover. Bulk of it still comes from our small leather goods division, which is the largest division till now. Almost 50% of the sales come from there, and about 42% sales comes from travel gear. When it comes to in terms of growth, I think both the segments have seen tremendous growth. Going forward, I keep saying this, that we always internally also we always peg a higher growth on the travel gear segment, but small leather goods continues to surprise us. It just keeps on growing. So I would say that while we anticipate that travel gear going forward would grow faster or at a higher pace than small leather goods, but only time will tell, which of the categories outshines each other. But we internally feel that travel gear will have a higher growth rate.
Understood. Fair enough. And so last was with regarding to the geographical footprint. So you have mentioned that you are currently present in some states of UP, Maharashtra, and Karnataka, and you are targeting increasing the market in that areas, which is what I can see from slide number 9 of your PPT. So, and you are also targeting some new regions of Northeast and newer states of Jharkhand and Chhattisgarh. So exactly what are we trying? Are we going through to online channel, or are we trying to start the offline channel in that areas?
See, online, we are as it is present everywhere, right?
Yeah.
Online is a India ki dukaan, right?
Yes.
That store is for the whole country. So it's all about how many pin codes are you able to service. And today, all your large e-commerce players of like Myntra, Amazon, they're serving almost every pin code available today, right? Or they would be covering more than 90% of the pin codes available in the country today. So from online perspective, we are already present everywhere. That is right. So whenever we talk about increasing our geographical footprint, it will always be offline. Now offline में geographical footprint आपके दो तीन तरीके से बढ़ सकते हैं. One is if the city is good enough to warrant a store. So for example, very happy to share that we've opened our first store in Bangalore. We've opened our first store in Hyderabad, both in January, right? We opened these two stores. So South, our presence is very less. And now we are concentrating building on South. So we've opened our first two stores in Hyderabad and Bangalore. So apart from this, we are getting into distributor agreements in the south of India. We've appointed a master distributor for small leather goods. Now we are looking at appointing certain distributors and master distributors for travel gear business in the South territory. So the growth is gonna be with your own stores, with large format stores like Shoppers, Lifestyle, Centro, now being owned by Reliance. Wherever these guys are increasing their footprint, we are as it is expanding with them. We had, when it was earlier Central, we had obviously pulled out because of the financial issues. And now that it has been taken over by Reliance, we have again sort of in the process of signing the agreement and rolling out in their stores. So pretty soon we'll be spreading across their stores. So as and when these guys also keep growing, adding on stores, we are a preferred partner with all these large format players. We are we feature in their top brands. So hence we will also keep getting space in their stores. Distribution helps us to increase our multi-brand footprint. So the multi-brand, the mom and pop stores, which still in India is huge, right? More than 80-85% of the retail in India is still unorganized, right? It's still the mom and pop stores. So hence distribution is the way to capture them. So we're increasing our distribution footprint also. So yes, we're looking at enhancing our this thing in the offline primarily through these various channels.
Understood. Fair enough. If I could squeeze one last question. So the Aristotle agreement which we signed, so are the terms and conditions similar to the Tommy Hilfiger, or they are different, like in terms of the royalty payment which we are going to make and in terms of manufacturing license and all?
So in terms of manufacturing, in terms of license agreement, yes, all this thing that we sign are all licensed agreements, right? And hence we get the manufacturing rights. We don't sign distribution agreements generally. So from that perspective, it's exactly the same. Obviously, the royalty rates and all differ. And while in the past, I may have, or I have, in fact, I've commented on the actual royalty payouts. However, will not be in a position to do that any further because of the confidentiality clause that we have in these agreements. I was reminded even by Tommy's this thing that we can't share the exact percentages, but yes, depending on the brand, it differs.
Okay, thank you.
Thank you.
Thanks, Mehak. We'll take the next question from Guneet. Guneet, you can unmute and ask your questions.
Hi, thank you for this opportunity. So I might have missed this earlier, but what kind of growth are we looking at in the next financial year? And given that you're emphasizing on offline growth in terms of expanding geographies, so I mean, what kind of store expansion can we expect in the coming year? Like, how many stores do we plan to open for the next financial year?
So growth, I had mentioned that we're looking at close to a 30% CAGR kind of a growth for the entire year. And in terms of stores, we now have 30 stores across the country, and probably we'll have a couple of more store openings before the end of March. For the next financial year, I think we would be targeting anywhere between 12 to 15 new stores being opened.
All right. And I have another comment to make. So I visited one of his stores in Connaught Place, and I was just doing a market research. So I went there, spoke to the people, and they informed me that the monthly sales are about 8 to 10 lakhs. And within the same market, I went to another, I think, American Tourister, or it was Samsonite store, and I inquired them also just to get an idea. So they gave an estimate of about 40 to 50 lakh monthly sales,
Right.
while that was also within the same market. So, I mean, looking at this difference, I mean, what are your plans to maybe grow your per store sales to a level of Samsonite or American Tourister? What steps are you taking? And why do you see such discrepancy? I just want to see, hear your comments on this.
Yes. So in terms of retail sales, what happens is location is a very important factor, Guneet, right? So if you walk into a mall, for example, even in a mall which is a closed environment, once you enter the mall, you are confined to within that mall space, right? Within those floors. The ground floor stores will always have a higher sales than the first floor, which will have a higher sales than the second floor stores, which will have a higher sales than the third floor stores, right? While all these stores might be visible from the central atrium, so visibility is not a problem, but location derives the sales, right? So the Samsonite store that you would have visited in CP, now CP is, if you'll see, is divided into three parts. One is the inner circle, then you have the outer circle, and then you have the radius, right? Our store is on the outer circle. Now, for an outer circle store, the sales that we're doing, I'll not say that they're the best of the figures. Yes, we see that it could easily go up to 14 to 15 lakhs. In fact, last month we've closed higher than 12 lakhs, right? In fact, not even 12 lakhs. December, we clocked 13.83, and Jan, we have clocked somewhere around 13.3 kind of sales. So we are slowly and steadily inching up. Now, against this sale, if you will look at my rental, the rental would be close to 2.5, 3 lakhs, right? Whereas the Samsonite store that you would have looked at a 40, 50 lakhs, there the rental would be close to 10 lakhs to 15 lakhs, right? So it is still, the ratio is still the same. Whether it is 1:4 or 1:5, the ratio is going to still be the same. So yes, you could say that at the time when we took this store, I was not willing to take a bet on a 10 lakh rupee rental store, right? You could say that we don't like to bet our shirt on a particular this thing. Now that we have a store, in fact, Samsonite American Tourister, if I'm not mistaken, they have 2 or 3 stores in the entire CP area. So they also have a store in the outer circle, and their outer circle store does a similar business, around 14 lakhs, 15 lakhs is the kind of business that they do. These stores are again, they are old stores. So our store is probably 2.5 years old. जिसमें से 1-1.5 साल तो कोविड ही निकल गया, so it's fairly new, whereas these other brands would have been there for 5 years, 4 years, 7 years, whatever. So basis on that, there are marginal differences, but अगर आप pure play की अगर आप बात करोगे, तो I would also like to cite an example of my Ahmedabad Alpha 1 store, right? Where in this 9 months, or in fact, rather, if I include January, so about in 10 months, we've done close to 2.5 crores from that one single store. So it's about 25 lakhs a month. And we have just one more brand on the same floor. And I'm sure their figures are lower than us. I would not like to exactly pinpoint on the brand, but apart from us, there is just one more travel gear brand on the ground floor, and their figures are obviously lower than us. So it depends on the location, on market, on everything. Touch wood, our rent to sale ratio in most of the cases in our stores are good, and hence we are profitable as a unit in all our stores. In our EBO, overall, EBO is a profitable division for us.
Great. Thanks for the clarification. This was quite well explained. So, would you be able to share your per store monthly or yearly revenues, like on average?
So we do if you look at the metro stores, for example, metro stores do SSPD of close to 80, right? Which is sales per square foot per day. So a 2,400 kind of this thing for the month, whereas a non-metro store would be giving us close to about 45 to 50, 1,500 kind of a SSPM. So in totality, agar aap dekhoge, so EBO for us, I've already given, is contributing almost 10 to 12%, 10% of our overall business.
All right. Thank you very much.
Thanks, Guneet. We'll take the next question from Anand. Anand, you can unmute and ask your question.
Yeah, hi Abhinav. Good afternoon. Congratulations on good set of numbers, sir.
Hi Anandji, thank you, thank you.
Sir, wanted to check with you how much you are planning to invest for the new brand in terms of stores, inventory. What is the capex required for this new brand over the next 18 months?
So in terms of new brands, it will also depend Anandji कौन से brand sign कर पाते हैं, right? But typically, अगर मैं बोलूँ तो a lightweight brand will entail anywhere between 4 to 6 crores, and a heavyweight brand would entail anywhere between 10, 12 to 15 crores. That's the kind of investment that will
that will include, okay. So that will include opening stores for those particular brand, or those will be sold under bagline only?
Sir, this will depend really on the brand. So, just for example, Aeropostale, if you'll see, I don't see us opening stores of Aeropostale. It's a lightweight brand. So lightweight brands will not have their own stores. Heavyweight brands might have their own stores as well, right? But the idea would be that the investment is going to go more in building bagline, where so if we tomorrow have 50 bagline stores or 100 bagline stores, whatever brand that we take, it immediately gets the benefit of those 100 stores, right? So we feel that's a bigger value add for all of us, and hence the concentration is going to be more on bagline. But
so sir, currently
if there is a brand which warrants here, it's a very good brand, it's a very premium brand, and you need to open a few stores, so we will then open a few stores.
So currently all the stores, sir, are they branded as bagline, or there's a mix of Tommy also?
There is a mix of Tommy. I mean, so around 20 out of the 30, around 20, 21 stores are bagline. 9 odd stores are Tommy.
So in this 2021 stores, we will start selling the new brand products, new branded products also.
Yes, sir. Day one.
Okay. And sir, royalty payment, you already mentioned that you don't want to mention that, no problems. Sir, one more thing you mentioned sometime back, that in Tommy you can easily see a growth of 20%.
Yes.
And the new brand will be in action over the next FY24 rather than FY25 as compared to FY24.
Ji.
So next year would be tough to grow at 30% because Tommy is the major revenue. So next year, do you think we would be able to do 30%?
हाँ सर, मतलब अगर on, even if I take a base of say 160 for example, 160 पे 10% की growth दूसरे दो brand से आना is about 16 crores, right?
Okay, understood.
Which is not that difficult.
Okay, understood. And sir, what is the long term? Can you share, sir, what is the projection which you have given to the new brand so that we have signed this agreement? Say 50 crore in 5 years or any numbers for that? There would be some minimum commitment, no, sir?
हाँ, तो ऐसे कह रहा हूँ कि so won't be able to share the anything regarding the agreement, but I can just say this, that being a lightweight brand, we've given a very conservative sort of projections, and we've signed it for 7 years, sir. So it's a 7-year license, and we've given conservative. So I expect that we will be doing far better than what we have given as a projection to them.
So this Aeropostal, I have seen their products on website on Amazon, and I don't know who was selling. So any numbers, sir? How much was the?
हाँ, तो सर पहले it was with Arvind, right? And उनके पास जो भी कुछ international products भी थे. See, Aeropostal internationally is a big brand, right? In the US, they have more than 500 stores. Correct. So
For travel gear, sir?
No, for apparel and
For apparel, no?
Yes. And Aeropostale, sir, more importantly, is a part of a group known as ABG, which is Authentic Brands Group. अगर आप Authentic Brands Group को कभी study करेंगे, तो it is a $25 billion plus kind of a sales kind of a group present across more than 150 countries. Huge. So Aeropostale is a brand that they own, and along with it, they own a lot of other brands also. And our agreement this time is not with any Indian counterpart. Our agreement is directly with the US counterpart of ABG. So it's directly with Authentic Brands Group. So hence it gives us an entry into ABG directly, right? So ABG has licensed partners across the world. And hence it gives us an opportunity to be a part of a group which has so many brands to choose from. And they will continue to add more brands in their portfolio as a growth model. So hence from that perspective, it's a very, very important milestone for us.
Understood, sir. Thank you, sir. Thanks a lot. All the best.
Thanks, Anand. We'll take the next question from Rizwan Patni. Rizwan, you can unmute and ask your questions.
Hi, good afternoon, Abhinav. Pleasure speaking with you.
Same here.
Abhinav, I was going through. I'm very new to the company, but I was going through some data from an analyst, and where it says that the market size of the luggage industry is around 20,000 in India. So of course we have a very, very big way to grow, and then possibilities to grow. But on the other side, when I saw your presentation, it says that 50% of the revenue is coming from online. Whereas I did some homework and seeing that the other players are not much in online. They are coming, their revenues are coming more from the store sales. So, and I felt that 50%, I don't know, but I'm just thinking that isn't 50% of revenues coming from a single channel is a risk to the business? And how do you see further that you can bring a equivalent distribution for growth in all other channels? So your leverage on one channel becomes more comfortable.
Right. So you're right when you say that the market size. In fact, pre-COVID, the market size, according to a Euromonitor study research, was 24,000 crores, right? Recently, though I have not seen the latest Euromonitor report, but recently Economic Times has come up with a statement saying that the bags and this travel gear and all these bags market in India is close to 48,000 to 50,000 crores. Right now, I don't know where that figure is coming from. I need to still validate it. But yes, point here is whether it is 24,000 or whether it is 50,000 crores, the market is huge, right?
Correct.
So hence, time and again, I have also said this, that we don't, as a company, we don't need to experiment into a lot of new categories, because in our own categories where we now have a product expertise, we'll be able to sort of grow to quite a decent level in our own categories itself. We don't need to look outside, right? Number one. Now, having said that, all the other players, they are obviously, more on offline, and online for them as a percentage is smaller. Yes. Now, if you'll see, VIP has been in the market for 40 years. Right? Samsonite is a global leader of luggage, and again been into the luggage industry for more than 30 years. Right? They launched Samsonite and American Tourister way back in 97, 98 in India. We are just a 8-10-year-old player, right? Whereas a VIP has more than 500 stores. Samsonite group again has more than 400, 500 stores. Safari has 400, 500 stores, right? All these are category players. They have been in this industry for donkey's years, right? For a very, very long time. So suddenly, we as a newbie coming up and comparing ourselves that, oh, they are so much, why are we this much? We will have to take that journey, right, Rizwan? But the fact remains that we took Tommy as a brand. We started off almost in 2012. By 2022, in roughly 10 years, in which 1.5, 2 years was marred by COVID and all of that, in 8 to 10 years, if you will look at this year, we'll be closing at retail, agar main baat karu, so retail will be closing somewhere close to 260 to 270 odd crores, right? तो आज अगर एक ब्रांड को 8 साल के अंदर में, 8 से 9 साल के अंदर में, if we've been able to build it from scratch to a 250 crore retail level, tomorrow once we have more brands, if I take another brand, which is say a heavyweight, which is equally well known, will I take again 8 to 10 years to build a 250? Of course not, right?
Yeah.
So hence, it's a journey. We will get to those kind of figures. We will get to, but probably a little more faster. And our bet and our entire differentiation from these category players is that they are a core category player, right? So they are a luggage player. They are a backpack player. They are a travel gear player. Whereas what we say is that we are a fashion accessories player, right? None of these brands, which are core category brands, no matter whoever they take as a brand ambassador, can never claim themselves to be a fashion brand, right? Whereas our model is very different, where we take licenses of various fashion brands, right? And I don't need to get started on the fashion consumption in India and how and where it's gonna go, right? Fashion today is touching everyone at every different point of time, right? Whether it is watches as an industry, whether it is footwear as an industry, whether it is underwear as an industry, whether it is garments, obviously takes the precedence. So, so we are in this game, right? And we feel that there is a huge future where the youth of the country, the discerning consumers of the country, they're going to migrate from core category brands to a more fashion forward need. And that's where we come into the picture. And that's our bet on this entire industry.
Thank
I hope
you.
I've been able to sort of.
Yeah, sure. Very, 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 very clear. Another question, Abhinav, is regarding the brand agreements. What you do with Tommy Hilfiger? As I remember from one of your past session, please correct me if I'm wrong, that the agreement is going to expire somewhere in December, and you don't see any reason of not extending it after that period because of your terms and conditions and your revenue generation from the brand, what you have given to them. On the other hand, now you have taken in Aeropostale, which is a lightweight brand, as you have suggested. So for future, is there anything coming during the year, not this financial year, but next financial year, a heavy brand coming in your, is there something in talk? Of course, I understand you cannot disclose the brand name or something, but is it there something which is under discussion and will be materialized, say, in a period of a year or 6 months somewhere?
Yes, we are. I had mentioned this earlier also, and I would again reiterate.
Sorry to ask you again.
No, not an issue as well. We are in advanced stages of contract and with a heavyweight, and we hope that these things take a little time because, as I said, this is like marriage. So the way I'm confident that आज टॉमी की renewal है दिसंबर में खत्म हो जाएगा. My team has already presented to them the spring summer 24. We are they are traveling here for the first cut design presentation of SS24. Right? No, they're giving me approvals for SS24 and everything. So you can understand that where the whole confidence comes that, once you sign a brand, until unless you've done something grossly wrong, this is like a marriage. तो अब वो marriage को culminate करने में कभी-कभी it takes a little time because सारे गुण मिलाने पड़ते हैं, सारे agreements पढ़ने पड़ते हैं. And here, unlike Indian weddings, prenup is already signed, just like international weddings where you sign a prenup agreement. तो वो prenup पहले sign करना होता है. So sometimes it takes a little more time over there. So, but we are in advanced stages.
My another question would be, if I can I continue with the question?
Yes.
During your agreements, do you have certain kind of a limitation? Example, say, just for example, Tommy Hilfiger. Yeah, I
had thought of answering this at one go because I sort of preempted कि आप ये पूछेंगे. So we are a multi-brand license player, right? So none of our agreements restricts us from signing any other brand or any other group. We are not married to either a brand or a group.
Perfect. Great. Last question, Abhinav, sorry. The average selling price between the brands, say Aeropostale or and Tommy Hilfiger, what is the minimum average selling price between those brands here, to just understand the heavyweight and lightweight price difference?
So Tommy Hilfiger, for example, if I talk about small leather goods, our retail price for small leather goods is to the tune of around about 2,900 in offline and about 2,200 in online, right? And if I take the example of, for example, Aeropostale, Aeropostale online would be somewhere around close to $800, $900, and offline would be close to about $1,200, $1,300.
Thank you so much, Abhinav. Thank you.
Thank you. We'll take the next question from Ankur. Ankur, you can unmute and ask your question.
Yeah. Hi, Abhinav.
Hi,
Thank
Ankur.
thank you for taking my questions and congrats on a good set of numbers. So
Thank
first question is, as in there are some companies which are talking that post Diwali there was a slowdown as in November and December. So
Yes.
how are we seeing in terms of that? What is our comment on that front?
Yes, so markets have been talking that post Diwali, retail has slowed down for sure. But somehow I would say that we've been able to beat that curve to a certain extent. And yes, had that momentum of retail still been going, probably the set of numbers would have been slightly better. But yes, overall retail as a segment, if you'll see, has slowed down a little bit post Diwali, which is a fact for most of the brands. We are able to sort of overcome that this thing as of now, because travel as a category, as a segment, is still growing, right? So hence, वो थोड़ा सा स्लो डाउन ट्रैवल एज अ सेगमेंट की वजह से बीट हुआ है. दूसरा, if you'll see again, we had a very good marriage season this year, and most of our products, whether it is luggage, whether it is small leather goods, they are very well accepted in terms of gifting and marriages. So that also has sort of beaten the regular trend. And third is, till now we are more attuned towards the premium sort of category of the market, premium segment of the market. जहाँ पे थोड़ा सा premium and luxury have still been able to sort of beat that whole curve of the downward trend. So these 2-3 reasons where we've been able to sort of beat the market trend, and we've still come out with good set of numbers.
Sure. And coming to this Q4 quarter, if I look at VIP and Safari numbers, they are low. They tend to be lower because of seasonality. But
Yes.
you are saying we can expect 45 or same Q3 kind of numbers. So how should we read into that?
When did I say that?
Sorry, you said 180 crore for full year. So based
No,
on
160, sir.
Yeah, 160. Okay.
Right. Yeah, but as I said, yeah, so numbers are gonna be plus minus 10% here and there in a similar zone. But yes, you're right. Q4 typically आप देखोगे तो February 2-3 दिन से यूं ही छोटा हो जाता है, and March again, at least for the primaries as well as secondaries, March is not a good month for retail, and hence, in my first thing itself, I had said that you should never look at a retail company from quarter to quarter basis. You should look at it from year of the same quarter to the current quarter, right? So it should be an yearly comparison rather than a quarterly comparison, because it's a cycle, right? So Q4, obviously, everywhere, March, the regular middle class also is, they have their tax plannings and everything. So retail goes a little down. March end का pressure रहता है सब पे. Businesses, your B2B sales get affected because nobody wants to sort of buy on new inventory towards the end of March. So सबका आता है कि यार, might as well bill it in the first week of April. So that's a general market trend.
Got it. Yeah. And you are saying for next 6 to 9 months, we'll have to work on brand building for the new brand that we have acquired. So will it be kind of that will lower our margins?
Yes, so as I said that net आप ऐसे समझो, Ankur, that we will have a similar sort of this thing. So my answer was more from the perspective that you could ask me a question, or the gentleman, I forget who had asked me that, but the gentleman had mentioned that, if you're growing by a 30% CAGR, will we continue to see a growth in your EBITDA levels? To which I had answered that it might not be the case, because there'll be certain additional expenses which would be coming in. New brands will have lower sort of gross margins. So net, we should be able to maintain a similar kind of an outlook. So I wouldn't give an outlook that we're going to be increasing our EBITDA by certain basis points quarter on quarter because of our growth. It was more from that perspective.
Sure. Thank you and all the best.
Thank you. We'll take the next question from Krishna. Krishna Bhaivani, you can unmute and ask your question.
Hi, Abhinav. Thanks for making yourself accessible to us. I just have one question, which is sort of more of a big picture kind of question. As of now, we have 4 brands, 2 of our own and 2 licensed. How do you see this growing, say 5 years out from now? What would you like it to be? And the second part of the question is, when do you see yourself being able to have more bargaining power in terms of royalties moving forward? Thank you.
So we clearly want to become a house of brands, Krishna. So that's our motto. And in the next 3 to 5 years, while we will continue to have our own brands, but at the same time, I've said this earlier also, that we would not be betting our shirt on our own brands. We will give it time. Give time to our own brands to sort of nurture and develop. See, there are 2 ways in which you can build a brand. One is, if you want to do a blitzkrieg marketing activity, you burn 10-20 crores. First sign up a celebrity for 3-4 crores, and then burn another 6 crores in advertising, and there you go, your brand is built, right? And you continue to pump in that kind of money. But we typically would, at least at this point of time, we don't see ourselves doing that. What we see ourselves doing is seeding the market with the right product at the right price point in our own brands, and slowly and steadily, our brands will keep on growing. So that's the route that we want to take. So yes, to answer your question, in the next 5 years also, I don't see a huge percentage of revenue coming from our own brands. Yes, if you ask me this question, so 10 years down the line, probably yes. By then, we would love to sort of establish our own brand, or probably by then we would have, you don't know, you never know, by then you would have become so big that you would have probably bought a few brands of your own, right? Or bought a couple of categories from these brands, right? So all those possibilities are there. This is how internationally also a lot of licensing companies have grown, where after reaching a certain point of size, they would have bought over the brand, right? So all those possibilities will kick in, and hence that's a very, very long-term plan. 10 साल की अगर मैं window या horizon की बात करूं, but for the foreseeable future, we see ourselves as a house of brands, all international brands, most likely, and doing sales across various different price points. So while we are currently in the premium segment, we will also bring, and all these brands are going to be fashion brands, right? So we're going to be bringing in brands at various different price points as well. So I hope.
Yeah, just a quick follow up on that. There are certain brands mentioned in your presentation. Are those the ones you are targeting?
They are more from an example perspective. In fact, if you will see that, ऐसे brands में ही अगर आप और भी देखोगे तो essentially, not a lot of people understand the concept of licensing, right? And once you understand the concept of licensing, you actually start understanding that, oh, I can, sky's the limit for me when it comes to signing number of brands, right? There'll be so many brands who will be interested in sort of exploring these additional categories with us. So yes, these are also a couple of brands which we are sort of targeting.
Just one last question. Are there any other licensing players in India who are your competition?
Not in our product categories at the moment, but there are enough. So Titan is one of the biggest licensing players in watches industry today, right? So apart from its own brand, Tommy Hilfiger is also a Titan license. Tommy Hilfiger watches is with Titan. They have other watches as license also. So eyewear, there's a company known as Sterling Metaplast, in which Marchon, which is the world's third largest eyewear company, has a strategic stake in Sterling now. They have licenses of almost 15 odd brands, right from Hugo Boss to Tom Ford to Tommy to CK to all these brands. So various different categories. Page Industries is a brilliant example again. So various different categories there are. None in our. We don't have as yet a competition in our own categories. We are the first players, and hence we have that first mover advantage.
All right. Thank you so much.
Thanks.
We'll take the next question from Shriram. Shriram, you can unmute.
Thanks for the opportunity. I have two questions. Basically, you mentioned that the contribution from small leather goods is 42% for the current year. So I just want to know what was the split for FY20. And my second question is, basically, do you have any plans to get into manufacturing? And I also want to know what is the material that is sourced from your group company? You do source some amount, right?
Sorry?
You do source some material from your group company, I believe, IFF overseas. So
yes.
what is that you purchase from them?
Okay, so small leather goods I mentioned was at 49%, almost 50%, 49.7% to be precise. So about 50% of the revenue is from small leather goods. 42% is at travel gear, right? And if I compare this with FY20, obviously, as a percentage, travel gear back then would be around 28%, I believe, or 25%, because we were still building up travel gear. Travel gear is a more difficult category to crack. Number one. Number two was because of the COVID impact, obviously, the travel had drastically sort of gone down, right? So from there, travel gear has shown a very, very good sort of a growth in coming up to. So the growth in travel gear has been higher than small leather goods in the past 4 to 5 years, if it so answers your question. Now, coming on to in terms of manufacturing, what we source from IFF overseas is backpacks primarily. And now we have started sourcing some bit of soft luggage, which is your overnighter trolley, right? But our total quantum of sourcing from IFF overseas would be approximately 20% of their total revenue, right? And from our perspective, if I look at in our overall sourcing bit, I think IFF overseas would be contributing close to 8%, 5% around 5 to 8%, 5-7% ke beech mein kuch is what our sourcing from there would be.
So do you have any plans to get into manufacturing?
Yes.
Can you elaborate?
Yes, we'll look at, we are in serious contemplation, and it is the entire proposal, everything has been put up to the board as well. And we are looking at getting into manufacturing, primarily in the travel gear segment. And the reason for us to get into manufacturing in the travel gear segment is if you see, small leather goods is today for us a bigger category. However, as of now, we don't have plans getting into manufacturing in small leather goods. Leather industry in India is a pretty well developed industry, and hence we don't see the need or the urge or having any sort of competitive advantage that we will have in getting into leather manufacturing. Whereas when it comes to your travel gear as an industry, own manufacturing becomes a huge competitive advantage, because it cuts down your dependence on China. India is still not so well developed when it comes to manufacturing in travel gear, be it backpacks, be it luggage, be it hard luggage, the entire gamut of travel gear products. There are very few factories. Second, as a group company, IFF Overseas has been in existence for more than, I think, 25 years now, right? And with that kind of experience, where we are manufacturing already for various different brands, you name a brand and probably we would have manufactured for them. So we have this entire strength in-house, which we feel that we can leverage. And third and the last point is that unlike how we understand manufacturing, this industry, the manufacturing is not that asset heavy. So your asset turn is close to 5 to 6 times. So if you're able to do a 5 to 6 times kind of an asset turn, it's not a very asset heavy industry. So considering all of this, we are contemplating to getting into our own manufacturing.
That will be part of the listed entity or the group? Listed
entity. Whatever we do would now primarily be only in this listed entity.
And currently, basically, how does your sourcing work? Like how much would be from China or Bangladesh?
So we were quite, you could say, Sriram, that pre-COVID, we were 100% dependent on China when it came to travel gear products. We were your, luggage, your soft, hard, everything was 100% China. So, but thanks to the entire team working very, very closely with certain manufacturers here, also thanks to IFF Overseas helping us out in sort of establishing sort of an ecosystem where the fabric now is getting developed with a fabric manufacturer, right? So that we are able to maintain that same standard of quality. So component of manufacturing, we've gone to various different components, thanks again to the experience of IFF Overseas. We've been able to sort of create that kind of a structure where now, I would say in terms of travel gear, I think 60% now is India and 40% is still China. We aim that, but to be honest, the 60-40 ratio is also not correct, being brutally honest, if I have to, because China, the entire supply chain has been disrupted. Pehle, because of the lockdown, so when the lockdown khola, to the COVID wave swept the whole country. So then again, the effect came, and uske baad they shut down for their New Year's. So once it opens, I would still believe that only in the luggage part, agar main dekhu to 50-50 dependence abhi bhi rahegi. Backpack, again, thanks to IFF Overseas and a few more factories in India, we've been completely able to bring it to India. So backpacks now is 100% domestic, but luggage continues to be 50-50. Going forward, we want to bring this down, and say 1.5 years down the line, we would love to see a 90% domestic and only a 10% for certain products which you will not be able to develop in India. Only for those kind of products we go to China.
Okay. Thanks, Abhinav, for patiently taking the questions. Wishing you the best.
Thanks, Sriram. Due to the paucity of time, we'll take one last question from the line of Rohit Vyas. Since he's not asked a question, Rohit, you can unmute and ask your question.
Hi, Abhinav. Rohit this side.
Hi.
So I have been attending a couple of calls and I've seen how the growth have been coming quarter on quarter. And so is it fair enough to understand or take it as brand concept wants to become something like Titan Industries, which has multiple brands in its portfolio licensed and owned, as well as its manufacturing in-house also manufactures a lot of, and hence it is able to control the market in a far better manner. Is it safe to understand that's what brand concept wants to become?
Yes, a very good, I would say, observation, Rohit. And yes, even in my previous calls and in certain of my one-on-one meetings, I have always drawn a simile with Titan. And internally, we really look forward to Titan as a company. If you see, there also are sort of we've manufactured bags for them. We've done a lot of business with Titan, so we've always been very closely associated also with Titan Industries. But you're absolutely right that there's just one difference that when Titan started, they started with their own brand, and they had the legacy, they had the know-how, they had everything where first they built their own brand. That's the only difference between us and Titan. But apart from that one difference, if you will see, Titan today has multiple brands at multiple price points in the fashion space. So in fact, in a way, Titan, and I always give this as an example, the Titan revolutionized the way watches was seen as a category, so till late 90s, and I think I've given this example too many times, hence I was not giving it today, but you've actually put the right point across. So if you remember, till late 90s, watches was a timekeeping device. It had a utilitarian use, right? It was a utilitarian category. And 10 years down the line, by 2010, watches was a fashion accessory, and it continues to be so today. So at every given price point, there are multiple brands available, multiple design sensibilities available, right? Now today, even a Giordano, which is not a watch company, but their watches are available across, I think, almost all watch stores, right? A Fossil, it's not a watch company, but Fossil watches are seen everywhere, right? People very happily wear that. Apple was not a watch company, right? Now the watches category is changing into a wearable industry, right? So these are, whereas if you consider our categories, our industry, it is still the luggage industry. So these changes are bound to happen. So yes, in a way, we are the Titan of this industry. We have our own stores also. We have franchisee stores also. We have distribution also. We are wanting to become a house of brands. And we want to be focused on the categories that we know the best, right? So in a way, yes, we really emulate Titan quite a lot.
Thank you.
Thanks, Rohit. And Abhinav, I would have typically asked you for your closing comments, but I think the last question answers what you want to what your is. So that brings us to the end of this call. On behalf of Brand Concepts, I thank you all for participating on the call. And I thank the management of Brand Concepts, Abhinav, for giving us his valuable time. Thank you.
Thank you, everyone, for joining us. See you. Bye-bye.
That's the end of this call. Thank you.
Yeah.